Welcome back to another roundtable. My name is Adam. With me once again, I have Rusmin.
Hello.
And Victor.
Hi everyone.
Thank you so much for joining us. And today we're going to talk about how you can read the 10K annual report. I think this is a pretty interesting topic that we can talk about.
Yep.
Because if you want to analyze a company, usually the first place that you want to go to is the annual report.
Yes.
Or the 10K for American companies.
Yep.
And in this roundtable, we're going to talk about the 10K specifically, because I think a lot of us invest in US companies. Some of the best companies in the world come from the US. So if you ever had a look at the annual report or the 10K and you found it like a mishmash of confusing numbers and a lot of text, like a wall of text coming at you, we're going to teach you how you can go through the sections and pick out what's really important when you go through the 10K. All right.
Yep.
So I think let's just start with why is the annual report so important? Just like overall, why is it so important?
I think it's basically like a health reports, that reports the health of the company, right?
Yep.
So all of us, when we go and do a medical checkup, there's this report and say that, we are healthy and all this. So same for the annual report. You have your financial statements that tells you, okay, what the company did in the past that come out this result, okay? And of course, also those extra things that the management did for that particular year, okay? But of course, in your own health report, you didn't show what you did in the particular year. So that's the reason why is it important, because you knows that they do certain things that come out these certain results. And if the things they do and the result is bad, then you want to know why. Because eventually, right, for the annual reports, there's a lot of nuggets, right, where you can get insights about the companies, right? And how the company perform is how the financial statements and the businesses perform moving forward. So that's where the main information you can get is the annual report. And I can tell you 95% of people don't read the annual report.
They don't read it cover to cover.
Yeah.
So like we have an example of an annual report over here. This is from Alphabet.
Yep.
10K. So it's a lot of pages in it. How many pages is that about?
Usually for most annual report, there are 100 pages.
100 pages.
Yeah. So this is considered a thin version.
Pretty thin, yeah.
Yeah.
And I would say, you're right. Most people don't read the whole thing.
Yeah. So if you read the annual report, you're ahead of 95% of the people.
All right. So this helps with your investment decisions, and kind of deciding what makes a good company.
Correct.
A good company or a bad company, right?
Mm.
So I think we're going to dive right into the 10K. And I know, like we said, there's so many pages in that. If you're a beginner, you look at that, you're going to get intimidated, right? How are you going to start reading something like that? What are the sections that you want to focus on? And in those sections, what's important to pick out? So what's the first one you look at?
So I think the first thing you look at is the content page. Right?
Okay,
yes. If you look at the content page, you will see that there's a lot of lines over there, right? Items in the content page, and usually people say is do I have to read everything?
Okay.
Right? No, right? Actually, you do not have to read everything, right? There's only certain things that you read. Like I will start off with business, right? Because you cannot invest in the business if you don't understand the business, right?
Okay.
So I'll go under the business segment, right? For the US 10Ks, they are very comprehensive. You can really know inside out of the business just by reading the 10K, because they share a lot of very good information inside. Yeah, so I'll read that segment first. Right?
So it's kind of like the business segment, like the section there. They kind of just explain what the business is about.
Yep.
Yes.
Like they tell you what it is exactly.
Yeah, and how they really make money.
How they make money
how
and
the
all that.
revenue is actually recognized.
It's a really good summary, actually.
Yeah, and also who are the competitors.
Yeah.
Sometimes they detail down all this. So what you are buying when it comes to buying any stocks, you're actually owning the business, right? And this is all captured under this description here. Right, so if you read it, you understand it. This is a business where you can consider looking at them, right? If you read it, it's like, what is this business all
that's
about?
True.
Of course, common sense tell you that don't touch because you don't understand.
Correct.
Yeah.
So if you read the thing and you don't understand what it's telling you, you probably want to put that aside.
Oh yes, too complicated.
Or you take more. If you really would like that company, then you got to take the time to go understand it before you invest.
Yes. Yeah.
So if you don't understand the business, just go on to the next company.
Yeah.
So I think that's the first part. And sometimes when you read the business, for example, you know this about this company, and you read, let's say Amazon. Some people may think it's just about e-commerce, and then you read the 10K. It's so many other business models within it, and you got to understand each and every business model that they have.
That's right. Yeah.
All right. So I think that's the first step to understanding a company, is to understand its business model. So that is found in the business section of the 10K. What's the next part?
So just below business segment, the next item is actually risk factor, right?
Okay.
So every business has risk. So you need to understand what are the possible risks that can actually affect the business profits and revenue, right? So I think this part they are very comprehensive. In the US, right, they literally state out every risk, right? Those really important one and those really I feel is like they just trying to cover up the lawsuit.
Yeah, these are called boilerplate risk factors. Basically, every company uses the same risk factors for this bunch of risk factors. Because it covers like almost everything.
Correct. So that's why you have to read the business segment first, because the business item, when you read, right, you can understand roughly what type of business it is. So when you read the risk segment, right, you can know what are the risks that really affects the business if it will happen, right?
Yeah, so under the risk factor, they have a few sub-segments. One is risk specific to the company. This is a part where you want to read because it kind of highlights that, the factor that will affect their business will drag down their revenue. Okay, so like in the Alphabet case, they say that a significant portion of their revenue actually comes from advertising. Right. So if anything next time in the future there's a change of trend of advertising and people no longer advertise on Google, there's a risk that you need to be concerned of.
And that's a major risk because that's how radio and TVs and newspaper are being wiped out, right?
Yeah, because I think for digital advertising, it's pretty much 98%.
90% about
90% of Alphabet's revenue.
So basically when you read this type of risk, you are kind of like get a sense that what is the trend now, right, and how likely that it's going to change over the next few years. So this is something where as an investor we always try to kind of like predict it, but of course based on what we are seeing right now, what we have, right? So you always need to monitor this and this part is where you need to understand it.
All right. So you basically want to pick out the risk factors that are unique to this business.
Yes. Correct. They also have some risks that related to the law, regulation, policy. So this is like typically, your companies like Alphabet were more prone to because they have a lot of legal action going against them because they are very monopolistic.
Okay.
So those are risks you can read, but in general, I think they are pretty much the same to most companies. They are basically subject to lawsuit and all that. So
I think the risk factors to me actually the most important thing for me to read actually for me personally. I really like to understand what the business is about, and the risk actually helps you to understand the business even better, not just what the business is.
I mean, when you invest, people usually think that how much money can they make from this stock, right? But very little they spend time on what is the downside. This is the part where it covers
how
the downside.
Can I lose money?
How can
that
I
is
lose
the first question you should ask.
And what are the factors that can affect the revenue and net profit?
Okay.
Right?
Yes.
So risk factors, very important. We're going to read that. So what's the next segment?
I think the next segment will be a few lines below. Under the part 2, item number 7, we will usually look at the management discussion and analysis, right? So that at that part, right, the management will usually discuss why the revenue and net profit increase, and for the year, what did they do, how's the performance of your company. So I think that is a very, very important part to read, right?
So it's almost like you're looking at the companies that tell you, we have few segments, all right? So for Amazon, they have e-commerce, they have AWS, right? And then they have advertising, and they kind of like have a peep into what they are doing, each of this segment, and which segment contributed the most to the overall revenue and profit. Okay, so from there you kind of know which one matter the most, right? So you want to focus on the majority, all right? So this is the part where you can actually find the information. Even for Google itself, they kind of break it down for search, YouTube ads, all right? And then of course you have your cloud and other bets, right? So you kind of have a full detail. If by looking at Google, you know that Google search is actually one of the biggest component there, 100 billions, all right? And then you have other bets, which is, all right, okay, they may have way more and all that, but those are just tiny bits, low single digit contribution to the revenue.
All right. Okay. So I think this is the next part. So after that, what do you read next?
After that, I think it's the financial statement, right? Your real health report, right? Whatever the management did or the business do that come out these financial reports. Okay. So in this financial statements, right, we are looking for big movement, right? Why suddenly there's a change in the profit or any of the item, right? There's a big significant change, right? So you want to find out why, right? And usually these financial statements, right, is usually linked with the management discussion, right, where they explain why there's a big shift, or if not, you can get the information from the footnote. Okay. But of course, at the end of the day, right, the business is still very important. You need to understand the business. That's what Rusmin said. You must understand, is there a change in trend, right? There was one scenario where there's this company called Bed Bath & Beyond. So I think if you bought Bed Bath & Beyond in let's say you were to look at the 10K report in 2007 or 2008, right? The previous 10 years financial statement is beautiful. It's really your typical companies that 10-10. That means they got all the best ratio, they fulfill everything, they got no debt, they got full cash. But for the next 10 years, their share price just tank.
Okay. Because
there's a change in their business, right?
Right.
Because it's like a health report, right? I can see, I go and do a medical checkup. Now I'm healthy, right? But does not means that the next 10 years are going to be healthy. It's what the business and the management did for the next 10 years that you can maintain the same health report 10 years later, right? So financial statement is still a backward looking thing, but then we also want to see whether what's the big movement in the financial statement, and we want to link it back to the business and see whether there's a disruption coming for them.
But essentially, if you look at financial statement, you kind of like, if you think this is a good business, the financial should prove to you that, So this is where you crunch all your numbers, your net margin, gross margin, your return on equity, return of capital employed, right, and your debt. You also can assess whether the company is overly leveraged, and you look at the cash flow, right. So these are the places where I think we oftentimes spend a lot of time, because you need to look at the trend of the revenue, also the profit, and also the cash flow, right? So, and how the management is doing with the money that they have. Are they buying back share and stuff like that? Okay, so all these are captured under your financial statement, your income statement, balance sheet, and cash flow. And I think most importantly, what Victor said is the footnotes, right? So sometimes financial statement is just a line, one line item, but then they will give you a footnotes where you can go into the footnotes, then they will like,
a
show
whole
you
page of it.
a whole page of it.
Explaining that one line item, right?
Yes, yeah.
Sometimes it's like that.
Yeah, but then 95% of people don't read annual report, right? And actually 99% people don't read financial footnotes. So
that's true.
Rarely people spend a lot of attention on that because it's too long.
But you really do have to find out, because like you said, what you want to look for in the financial statements is kind of like consistency. Because you don't want a company that's just up and down, it's very unpredictable. You're looking for consistency, growth, and the best companies display that. And the financial statements should show that.
Yes, correct. And of course, you're not only looking at the 1 year, you're looking at the previous year, because whatever the management did, right, it will shows in the previous year and financial statements. So like example, Rusmin said the management is buying back share. It can shows the alignment of the management, right? You are tracking for behavior, right? But the behavior don't happens on one particular year. The behavior happens throughout the years. Right?
So you do go through multiple 10Ks as well.
Yes,
I mean, in one 10K, they usually go back 3 years, usually, for certain line items, the last 3 years. But you do want to go at least 5, maybe 10 years, right?
Then of course, I mean, we talk a lot about the 10K. I think most importantly is where do you find the 10K, right?
Okay.
So I think Google is going to be your good friend. Just Google it, 10K, the company name, or you can just go to the EDGAR, EDGAR. It's electronic data gathering, analysis, and retrieval system for a lot of US listed companies.
If not, you just type the company's name, investor relations.
Oh yes.
Then you just go to the website under the SEC filing 10K.
Everything is there. And on our side, if you want a cheat sheet of what we're discussing so far, how to read the 10K annual report, and you want to use that for reference when you're going through the sections in the 10K, you can go to our link, fifthperson.com/10K to download this cheat sheet. It's entirely free. You can just download it and then use it for your reference if you're new to the 10K and you want help for its reference and all that. All right. So far we've discussed quite a bit.
Four items to look at, right? Business, risk factor, and then management discussion, and of course the financial statement and the footnotes I will classify as one. The fifth one is, of course, we also look at sometimes the executive compensation. This is usually not part of the 10K. They will say, you can go there to the page. I think that in the case for Alphabet, you can just go to item 11, page 88. But then we go to there, they will say, go and download the proxy statement, which is you can download the proxy statement also on the investor relation page. And this is a part where you can get to see who are the chief level executives, where how much they are drawing their salary from the company, and you also want to look at how much they are getting versus how much the company is making. So there are companies that are losing a lot of money, and the executive are drawing tens of millions of, or sometimes hundreds of millions. So this kind of management, you have to ask yourself whether they are working for you, they're making money for you, or they're making money from you.
Themselves.
So these are things kind of like, as you move along, you want to also dive deep into that.
Yeah, because I think at the end of the day, it's you're investing in a company means you're investing in people
Yeah.
Yes.
who are running
Yeah.
that company. You
Yeah.
got to trust that team to manage your money.
Yeah.
Yes.
Because I think a lot of people sometimes just look at stocks
Yeah.
as just like a lottery ticket sometimes. Just trying to get in and out and make a
Correct.
quick
So same
profit.
thing, you have to read the annual report. If you don't read, how do you know the person is healthy?
Yeah, that's
Yeah.
true.
Yeah.
All right, so we've discussed quite a bit about 10K. I think it's quite a bit, so do go through it yourself. I think there's a lot of information in that. But what are the red flags that you look at when you go through a 10K? I mean, these are all important. You won't go through that. But
Yep.
are there any things that you look out for that go, oh, I should be careful with that? And then, that kind of we want to avoid a company
Yeah.
like that.
I think one of the biggest red flag is actually we have Rusmi had mentioned earlier on is the change in trend, right? Which is disruption. You don't want to buy into a company that you know they are being disrupted, right? So for instance, just now I bring up the case of Bed Bath and Beyond, right?
Yep.
At that point of time, their numbers are beautiful, but that at that point of time there was e-commerce coming up to challenge them, and that is going to be the trend moving forward, and no doubt. So if you know that your company is fighting against the trend, right, of innovation, right, you don't go into that company. Right?
So in the case of Bed Bath and Beyond, they
Yes.
were disrupted by e-commerce.
Yes, correct. And also, for instance, right now, if you go back to the Alphabet case, right, your newspaper and your TV,
Yeah.
right, is being disrupted by Alphabet and
Yeah.
Facebook, right? So you should not be investing in companies that doing TV
Yeah.
or maybe
Traditional advertising.
traditional advertising, right?
I mean, there's so many examples. I mean,
Yeah.
Nokia is a great example. I mean, it's not an American
Yeah.
company. They don't have a 10K, but they have their own annual report, right? And they were disrupted. I mean, they were the biggest.
Yeah, 40% market share.
At one point, it was even bigger than that,
Yeah.
I think.
Yeah.
Yeah. So, but when the iPhone came out in 2007,
Yeah.
it was just a launch, a
Yeah.
lot of hype, but it was still king of the hill
Yeah.
for Nokia, and then it just went away.
Correct. Yeah,
Just like
because this kind of the disruption, right, don't happen overnight.
Yeah.
Right. They take time to chip off their revenue and net profit year after year, and eventually suddenly.
And there's
they
a tipping point, and
Yeah,
it just
then
like
just
snowballs,
disappear. Yeah.
and that's
Yeah.
it.
Yeah.
Yeah. So disruption is one red flag
Yeah.
that you really
They-
look out
correct.
for.
Yeah, because there are like things in the financial statement. There are a lot of things that we can look at. Whether there's an increment of revenue faster than your receivables that are actually increasing faster than the revenue. So sometimes this is the things. I mean, it's a big topic there. Okay, but within the financial itself, there are a lot of things to look at. But one thing that I can share within the 10K is maybe with things related to the related party transaction. Where the public listed company may have transaction with the executives or the insiders, the biggest shareholders, and sometimes this leads to a loophole where they can actually siphon the money out of the list co. Okay, I mean it happens a lot in Asia. In the US, I see it's a lot cleaner. But I think these are the one area where you want to avoid basically companies that have too much dealing with the insider themselves, because
Alright.
it can distort the numbers.
All right. So that's why the financial footnotes are so important.
Yes,
Oh,
correct.
To know
yeah.
where the money is going, where the money is
Yeah.
coming from.
The RPT will find under the related party transaction will find under the footnote.
Yeah.
If you don't look at the footnote, you will never know.
Yeah.
Yes.
Okay. So I think these are pretty much the 5 segments that you look at
Yep.
in the 10K annual report. So just to summarize, you have the business, the risk factors, management discussion, executive compensation,
Yeah.
which
Yeah.
is related to that in the
Yeah.
proxy statement, and of course the financials and the footnotes. So
Yep.
once again,
Yeah.
if you want a cheat sheet of all these segments and how you go about analyzing them, go to justfifthperson.com/10K and you can download this cheat sheet for yourself for your reference when you're going through the 10K annual report for yourself. All right.
Yeah. So 10K will be a good starting point, okay,
Yeah.
and because it's not the end, you always better to supplement it with the earnings call,
Yep.
Yeah.
and of course go and download the proxy statement.
Yeah, so there are
Yes.
so many other
Tons of
things when it comes to analyzing or understanding a company. It's kind of like
Yes.
dating someone else.
Yep.
You don't just go on one big date and then you kind of know the person.
Correct.
Yes.
There's a lot of
Yep. So your earning call is for you to assess the management even
over
further.
time,
Yeah,
right?
Yeah.
So it's just like dating, I guess. All right, and you want to marry a good person. Same for your stocks. Okay,
Yeah.
so I hope that was really useful, especially if you've been wondering how to read the 10K annual report and it's like a wall of text that's really intimidating. We broke it down for you. It's really easy. So once again, I think this will be really helpful, especially if you're a beginner and you want to start analyzing a company. So once again, my name is Adam. That is Rusmin. That's Victor. Thank you so much for joining us. If you like this roundtable, please hit the like button. Tell us we're doing a great job. Of course, any questions about the 10K, put them in the comment section. Subscribe to our channel. Many more roundtables coming up as well. And of course, go to fifthperson.com/10K if you want that cheat sheet and just download that for free. See you around again.